Hi, and welcome to today's edition of the market analysis for today, the 8th of September. I'm Giovanni Benacour, operator and educator with Vantage Markets. Well, since money is always top of mind for us markets people, today I wanted to check in on how the US dollar is doing. Like a thermostat in midsummer, the greenback has shot up upwards in a relative short span of time. The currency hit its highest level in 2 decades, and the dollar index has climbed 50% this year. That puts it on track for its biggest annual leap since 1981. As of this week, the dollar is up 13% against the euro, 15% against the British pound, and 20% against Japan's yen. Europe's energy crisis, Russia's war on Ukraine, and fears of a global recession have sent traders to the safe haven dollar. But perhaps most importantly, we can look to the Fed, the reason for the dramatic surge. The central bank has hiked interest rates at the most aggressive pace since the 1980s in an attempt to stem high inflation, and at least one more outside hike could come this month. The Fed has raised rates by 2.25% points since March, with the target range now standing at between 2.25% and 2.50%. Yesterday, Fed Reserve Vice Chair Lael Brainard said restrictive policy measures will be in place for as long as it takes, meaning no rate cuts anytime soon. Investors have flocked to the greenback because markets recognize policymakers are behind in their inflation battle. The US currency tends to increase in value against other currencies when the US economy is extremely weak, often a time of heightened risk aversion or very strong. It's worth noting that the dollar strength has prompted particularly aggressive moves from China. It's up 8% against the yuan in 2022. The dollar's relentless advance has sent China's foreign exchange reserve to the lowest point since 2018, Chinese government data revealed this week, as the value of its other assets declines. At the same time, the People's Bank of China has moved to shield its currency from further declines as it nears the psychological threshold of 7 per dollar. On Wednesday, Beijing imposed a stronger than expected reference rate for the yuan for the 11th day in a row. It remains to be seen whether policy adjustments can save the falling yuan from the dual pressures of the hawkish Federal Reserve and China's COVID-19 lockdowns. With that said, let's take a look at what the market has entitled for us today. All right, so we are looking at a daily. Let's change it to 2 hours. All right, so market has opened. It traded very briefly below my pivot point. The 12,000 psychological support level is in place. I believe that for today, we should be trading within ranges, within these channels of my pivot and my resistance, and for my pivot and my support. At the given time, the 50-day moving average is acting as a dynamic support right below our candle, our 2-hour candle, meaning markets could come down to it and find that support. The pivot point is real close to it, so it could bounce towards our resistance of 12,400. Otherwise, should it break and close below our pivot or close below uh, this candle, then we could probably come down to contemplate another attempt at breaking that 12,000. Here we have our S&P 500. It's kind of the same scenario as the NASDAQ, even though our 50-day moving average is way above our resistance point. But the RSI is really neutral. It could come down to being oversold as much as it could obviously come up towards our overbought. But we first have to reach that 50 mark level. I am supposing, I'm assuming that for today, given all the economic data has come out, jobless claims have lowered, so we could probably see a calm rest of the day for the markets. I don't expect high volatility for the markets today. Crude oil is the one that has really given us a sense of that perhaps $80 could have been contemplated. It reached $81, but we need to see if this is going to sustain. Right now, we are in a higher movement of the market. The RSI is coming towards a 50 mark, so we could probably see a continuation of this movement. I have my pivot point acting as a resistance level so far. The 15-day moving average is closing in anyhow, but I would assume that markets will find some resistance right around the pivot and therefore come down and make another attempt at 80,000. First of all, it will have to come down to $82 as a psychological support level. Then we have here our Nat Gas. Nat Gas has been looking to reclaim its bullish movement after such a strong sell-off that we've seen the last couple of days. And so, but take it out. This ranging consolidation stage has already given us some sort of a breakout. This breakout is trading right above our pivot point. Our resistance is at 8.17. Should we come and find that we have broken our resistance, then we can continue to contemplate values, rounded values, psychological round values, 840, 860. All right. Then we have gold. Here we have gold. Perhaps gold is looking to get beat up again and see if this movement to the downside can continue. We have the 50-day moving average right below it, acting as a dynamic support. The pivot point is right below that. 1700 is our psychological level. We could probably come down and retest it again. Then we have silver. Silver has been a bit more steady. It opened up on a daily chart graph. It opened up with an up gap, but it was closed on a 2-hour. We see that movement much better. We have the 50-day moving average right below the market, right above our pivot point, so it's going to act as a nice support level for the markets. 1840 is my psychological support level, which is what the market was trading. Really low volume here. Then just volume came in and made an attempt to make higher, but right now market could probably be in a consolidation stage and therefore looking for more buyers to take another attempt at that 1880, where the 200-day moving average is right below that, or 1860 initially. All right, so we have here copper. Wow, copper really wasn't in a downtrend. It now has recovered. Let's take a look at the 2-hour chart, see what's happening. And in the 2-hour chart, we see that the moving averages are really closing in on each other. Once we have the 50-day moving average crossing from below the 200, we could probably see a golden cross, and that will entitle a nice move to the upside. So right now, the 50-day moving average is below our pivot, acting as a support, and so therefore the markets will probably come down, find that consolidation right now where it's at, and then make another attempt at moving higher. Bitcoin is the one that has really been on the radar a lot. The Nasdaq, as long as the Nasdaq continues to decline, Bitcoin most likely will do so. I will be moving into that Bitcoin winter. Is most likely. It usually happens every single year. It happens like the winter comes in, and then right in December, markets happen to have a nice rally and just move higher. But 18,000 is the one that we want to keep our eye on. So far, Bitcoin is looking to come back up towards the 20,000 and sustain sustain around that level. But we need to see more participation and less rhetoric from the markets talking about regulation and whatnot. That's going to happen when that's the key. When it's going to happen. regulation. So then we have the euro. Euro has really, had a rough time sustaining itself above parity. Uh, I will assume that the market will remain very, very lateral, very ranges, just doing a horizontal move, not much movement. I'll believe it's going to be like around the parity value. Okay, as long as we have our dollar index still high, 2 decade high, will it come down? Will it come up to 100, 111? That's yet to be seen. But first, we need to come back up to 110 and break our resistance of 110.50. Well, that's it for now. Have a fantastic day trading. See you tomorrow.